I'm going to call this meeting to order. Thank all of the witnesses for being here today. We look forward to everybody's testimony. I'm pleased to spend this, which is my first hearing as a chairman of this subcommittee, focusing on a government policy that is such a bad idea that when it was first enacted in 2006, Congress immediately delayed its implementation for 5 years. And when 2011 rolled around, Congress again delayed implementation of this 3% withholding requirement for another year. Now the IRS is causing further delays of the withholding requirement until 2013 because, as the IRS says, implementation of it would simply be too difficult, even though they've had 6 years to get ready for its implementation. Since no one seems to interested in implementing this policy, hopefully this hearing can build on this Congress's successful bipartisan repeal of the 1099 reporting requirements and serve as the starting point for a congressional action to repeal this 3% withholding requirement. The original intent of this withholding was to close the tax gap. In other words, 3% withholding was supposed to reduce the amount of taxes that were owed by government contractors but that went unpaid. So in that sense, it's very similar to the 1099 reporting requirements that we took up already earlier this year in this committee and that this Congress subsequently repealed. Both the 1099 reporting and the 3% withholding requirements sought to close the tax gap through increased burdens on businesses of all types, but small businesses, as so often is the case, were hurt the most. Small businesses today already operate on thin profit margins with little room for any additional withholding. As has been discussed in this committee regularly this year, regulatory burdens fall particularly harshly on small business. And the 3% withholding requirement would be no exception. Many small business contractors, including those folks testifying here today, work for the government for less than a 3% profit margin. So the 3% requirement would force these contractors to wait until the end of the year, not only to get their profit, but also to cover all of their costs. Also troubling is the possibility that government contractors will not have the funds to pay their subs during a project and will have to find outside financing to complete projects. And I think all of us who are related or involved in the small business community these days know how much fun it is these days to try and get outside credit. Even worse is the fact that implementing this 3% withholding requirement means treating all small businesses and their contractors with suspicion. Instead of rewarding those small businesses that choose to compete for and win contracts, the government essentially pre-accuses them of cheating on their taxes. The government already requires all contractors to certify that they are in compliance with Federal tax law, so one is left to wonder why we assume that they are going to break the law after they win a government contract. Furthermore, there is a burden, believe it or not, and this is so often the case in what we do in Washington, there is actually a burden on State and local governments as well. I look forward to taking the testimony today of the Treasurer from my home State of South Carolina as to the impact on the States. And there is a very real impact on the States. It's yet another unfunded Federal mandate in this 3% withholding requirement. We also have witnesses from the Defense Department with us today to testify as to the great expense that this withholding requirement will impose and how these expenses far exceed any projections for additional tax revenue. It makes absolutely no sense for the DOD to spend $17 billion over 5 years to save less than $6 billion in the first year and only $200 million a year after that. The Joint Committee on Taxation has actually predicted that after the first year, all increases in revenues to the government from this proposed 3% withholding will come from interest that the government earns on the withholding. It's essentially forcing small business and other contractors with the government to float the government an additional 3%. It's completely outrageous, and I look forward to hearing from the small businesses today that will testify as to the other ways that this 3% withholding requirement will affect them. We have 3 really good panels today, but I also want to acknowledge all of the organizations that submitted information for the record. We have over 30 statements, and I would love to read the list. There's about 35 organizations in here, and I mean to slight nobody, but this really is a who's who of American small business. Everybody who is involved in this industry from A to Z is checked in on this 3% withholding bill, and I really appreciate the effort that they have made, and this will be extraordinarily helpful to us as this committee will, the testimony will be today in pushing this initiative further through this Congress. Here's how we're going to work it today, folks. Ordinarily, oh, by the way, I ask unanimous consent that those be added to the record. And hearing no objection, it's so ordered. Here's how we want to do it today before I recognize the ranking member. And I apologize for speaking very quickly. It's not something ordinarily we do in South Carolina, but I've been informed that we may begin voting today as early as 11:30. I've been through enough hearings in Washington to recognize what happens when subcommittee hearings are interrupted by votes, which is that nobody comes back afterwards. And especially today, given the number of amendments that we may be taking up on the floor, these votes may take well over an hour, as many as possibly 2 or 3. So in the interest of time, we will be asking folks to try and stick to the 5-minute limit. And we will not engage in as much back and forth as you ordinarily might hear from us, because we do want to make sure everybody gets a chance to get their statements in the record. So with that, I recognize the Ranking Member Chu for her opening statement.
Thank you so much. I thank the gentleman from South Carolina, Chairman Mulvaney, for yielding. Today's hearing will focus on an issue that could impact millions of small businesses across the country contracting with the Federal Government. The United States Federal Government is the largest purchaser of goods and services in the world, purchasing more than $425 billion per year. And small businesses play an integral role in meeting the needs of the Federal Government. In fact, Federal agencies are required to establish contracting goals with a total of 23% of all government buying targeted to small firms. Therefore, any policy that could hamper the ability of small firms to do business with government must be looked at carefully. While there is often little agreement in Congress on many policies, there is bipartisan consensus that the issue of the 3% withholding requirement on all government contracts needs to be addressed. The original intent of the law was to prevent government money from going to individuals and companies with outstanding tax debts. However, as the law was written, the withholding will apply to virtually all contractors, even if they don't have a tax liability or other delinquency. Like the 1099 filing requirement that was recently repealed by Congress, the reasoning behind the 3% withholding requirement was to increase tax compliance and reduce the tax gap. However, this is another instance where a broad brush approach has harsh consequences for small firms. First, 3% of a contract often represents the estimated profit or operating cash flow for small firms in the construction industry. This money could be used by contractors to compensate for material costs, supplies, and other operating expenses. The withholding requirement will force many small firms to divert funds needed to complete a contract, creating cash flow problems. At a time when small firms are still having a hard time accessing credit from banks, laws like this create another barrier for small firms seeking to do business with the government. The new mandate will have an adverse effect on the smallest of firms, since many prime contractors may be compelled to pass the costs associated with the 3% withholding requirement to their subcontractors. Additionally, government agencies have voiced their concerns that administering the 3% withholding requirement will create more costs than benefits. The Department of Defense issued a report that implementing this could cost $17 billion for the first 5 years alone, far outweighing the revenue brought in. State and local governments have also actively fought to repeal the 3% withholding, since it represents an unfunded mandate at a time when state and local budgets are stretched to the limit. In fact, many state and local agencies do not have the internal processes and systems to withhold payments and track them. Although the implementation of this law has been delayed, now is the time to fully repeal this onerous provision. At a time when America needs to promote economic activity, the 3% withholding only hampers transactions between businesses and the government. If Congress does not act, businesses will face additional paperwork every time they sell goods and services to the government. As the economy continues improving, small businesses need to focus on what they do best, developing innovative new services, bringing additional products to market, and creating jobs. And while it's important to enact policies that ensure taxpayers are paying their fair share of taxes, overreaching policies do not serve that purpose. There is bipartisan support for this repeal, and doing so will allow small firms to continue to perform quality work on behalf of the public. With that, I would like to welcome Congressman Herger to the committee, as well as the witnesses who have taken time from their busy schedules to testify here today. I yield back.
Thank you, Mr. Chu. Very briefly, just for the folks who have gathered here and for the folks especially who are here for the first time, including the folks who are testifying for the first time, why are we here? We're here to sort of take the testimony and build a record. It's the job of this committee to take information about Mr. Herger's bill that we'll hear about in a few minutes, and then make recommendations and report back to the Ways and Means Subcommittee with hopes that they will then approve this bill, bring it to the floor so that we can vote on it, and then send it to the Senate. Towards that end, you saw the book that we have. That's part of the record. The other record will be made up today by the testimony of the three different panels. And our first panelist is our colleague, Congressman Wally Herger. He serves on the House Committee on Ways and Means. In that role, his primary legislative concerns include securing economic growth and encouraging innovation and entrepreneurship by reducing the tax burden on Americans' families and small business. He's also interested in making government run more efficiently by reducing federal regulatory burdens and spending, and responsibly reforming entitlement programs to make them sustainable and ensure that they'll be around for the future generations. Congressman Herger is the sponsor of H.R. 674, of which I'm proud to be a co-sponsor, and which seeks to repeal the 3% withholding provisions, which is the bill we're here today to discuss. Congressman, welcome, and we look forward to your testimony.
Chairman Mulvaney, Ranking Member Chu, and members of the subcommittee, thank you for holding this hearing on the need to repeal the 3% withholding tax on government contracts. As someone who has been passionately opposed to this tax from the day it was first signed into law, I'm encouraged by the committee's interest in this issue. Section 511 of the Tax Increase Prevention and Reconciliation Act of 2005 requires government agencies at all levels, federal, state, and local, to withhold 3% of payments for goods and services effective in 2012. The Internal Revenue Service has recently issued regulations delaying this requirement until January 1, 2013. But agencies and businesses must still plan for it to eventually take effect. The breadth of this 3% withholding tax is truly astounding. It affects everyone from the manufacturer who builds tanks for the Army to the nursing home that cares for poor seniors on Medicaid, from the construction workers who repair roads and levees to the commissaries that sell groceries to families on military bases. As the members of this subcommittee are well aware, small businesses are the lifeblood of our economy. I come from a small business background myself, so I have firsthand knowledge of how our country's entrepreneurs and job creators are burdened by a complex tax code and cumbersome regulations. If the 3% withholding tax is permitted to go into effect, it will only add to that burden. Many businesses that contract with the government operate on very narrow profit margins, often less than 3%. As a result, this tax will create serious cash flow problems for small businesses. Today, our economy is in poor condition. The stock market may have improved from the low point of the recession, but for most Americans, the signs of recovery have been few and far between. Millions of people are still without work. In my Northern California congressional district, some counties have more than 20% unemployment. Government regulations and taxes that were a bad idea even in happier times are absolutely disastrous when our economy is struggling to recover and create jobs. In addition to its impact on small businesses, the recession has also taken a toll on state and local government finances. Cities, counties, and states across America are struggling to balance the budget without raising taxes or slashing vital services. The 3% withholding tax would worsen this fiscal crisis by creating new administrative costs and potentially raising procurement costs for state and local governments. Supporters of the 3% withholding requirement have billed it as a tax-compliant measure. Yes, It's a problem when government contractors don't pay their taxes. But instead of slapping a new tax on everyone, a tax that will actually cost the government more to collect than it raises in revenues, we could simply stop awarding government contracts to people who cheat on their taxes. In fact, the 3% withholding provision became, if it became law, OMB and Treasury Department have announced several initiatives to do just that. Hopefully, these new compliance measures will provide the final push for Congress to repeal 3% withholding once and for all. Again, I appreciate the opportunity to testify this morning, and I look forward to working with the chairman and other members of this committee to move ahead with repeal.
Thank you, Mr. Herger. Very briefly, I have one question. It just came up, was presented to me a day or two ago when I was talking about this bill. And I think there was a GAO report that came out last week or early this week that indicated that there were as many as 37 recipients of grants or contracts under the Recovery Act who owed taxes. 3,700 folks who got government contracts or government grant under the stimulus program actually owed taxes, and I think the total amount that they estimated that they owed was $750 million. So the question was put to me, and I'll put it to you, which is, against that background, why is this bill still a really good idea?
Well, again, I don't think it's first of all, everyone should be paying their taxes, and we should be moving in a judicious way that makes sense to ensure that those who aren't paying their taxes do. We might point out this is a small percentage that don't pay their taxes. We should not be penalizing the masses who do pay their taxes just for those who aren't. I believe this. The government has taken steps to correct this. We need to take further steps. As a matter of fact, 1/4 of those who didn't pay their taxes, we were able to find out. We were able to deal with. Again, there are more judicial ways to do this than penalizing everyone.
I agree. Thank you, Mr. Herger. I yield now to Ms. Chu for any questions.
Congressmember Herger, the repeal of the 3% withholding seems to have broad bipartisan support. It's clear that both parties want this fixed and small businesses want it done quickly. And the title of this hearing is Delay No More, Repeal. So when does your committee anticipate marking up this bill or taking any other substantive action to repeal it?
Chairman Camp, Chairman of the Ways and Means Committee, has indicated his support. As you know, there's a lot going on in Ways and Means now with health care and a number of other areas. But so we are, the fact that we're having this hearing today, the fact of the growing support around the nation, I think helps put this more to the importance of bringing this sooner than later to that we'll be having a markup on it in Ways and Means.
Chairman, well, I actually have another question. Congressman Herger, we know that when companies do not pay their fair share of taxes, it creates an unlevel playing field. I believe this measure was enacted as a tax gap proposal. Do you believe that there are measures that could be put in place to close the tax gap and help level the playing field for honest small businesses? If so, could you share some of those with us?
Absolutely there are, and I think we're moving towards it now. As I mentioned, 1/4 of that amount that we indicated that hadn't been paid by new measures that have been put into place have already been able to determine those 1/4. And we need to move. We need to continue taking stronger measures. But a measure like the 3% that penalizes everyone, the masses who are paying their taxes, is not the way to go about this. And we need to keep the pressure on so that everyone pays their taxes.
Thank you. I yield back.
Thank you. I recognize the gentleman from Florida, Mr. West, for up to 5 minutes.
Thank you, Mr. Chairman. And my colleague, Mr. Herger, I only have one question. You know, having served 22 years in the United States military and retiring thereof, and of course, when you talk about the effect upon commissaries and exchanges, do you see that possibly with this 3% withholding tax that the Department of Defense may then push the costs against the individuals who are using the commissary and exchanges to include our retiree community?
I don't think there's any doubt about that. This will increase the cost to commissaries, and I'm sure that this cost it'd be very difficult. As you know, the military is running on very frugally now, and I think it's very likely that these costs will be passed on, and therefore our men and women in military will have to pay more than they would otherwise.
Thank you, Mr. Chairman. I yield back.
Thank you. Recognize the gentleman from Louisiana, Mr. Landry, for up to 5 minutes.
Mr. Herger, I'm just curious, whose brainchild was this in 2005?
I know this it originated in the Senate. It was something that was tagged on to a legislation in the latter hours going through, part of an omnibus pay for, and
you don't know who in the Senate?
well, I think it's public knowledge who's been.
No, I don't know.
That's
what I'm asking.
But it came through the Finance Committee of the Senate.
Because it just seems to me that this automatically increases government's cost. I mean, companies who are operating on thin margins and need cash flow, when they're going to bid on these projects, they're going to have to factor this in. So that just increases our costs. I'm just trying to figure out as a freshman here how people come up with ridiculous legislation like this.
Well, giving them the benefit of the doubt, I have to believe that it was well-meaning. I'm sure they thought, well, we'll just withhold 3%. That way we'll make sure that we collect it. But again, I think it's obvious as we look at it and analyze it, it was something that was not well thought out. And certainly as we're hearing from our small business people, and not just the small business, but as was mentioned, just the Department of Defense, it was estimated it was going to cost them an additional $17 billion to implement this. So I think as we analyze it, something that might have started off well-meaning, certainly we can see the repercussions are very, very derogatory and negative, and something we need to correct sooner than later.
Well, but was it, what I don't understand is they must have known it would have had some sort of impact because they kicked the can down the road till 2010. And then, of course, they realized that it was a problem, and they kicked it down again, and now it's on our lap. I'm trying to figure out is how, I guess what they think about when they pass legislation like this. I know it's like a feel-good piece of legislation telling the American people that, we're going to do something for tax cheats, when really what we should be doing is letting the IRS go in and enforce those provisions. So I was trying to get a little bit of you. I know you've been here for a long time, and so I'm kind of trying to get some wise advice, I guess, today.
Mr. Landry, I think the wise advice is coming from new members like yourself that have been out in the real world. I think the bottom line is, as happens so often, well-meaning legislation many times has not been thought out, and how it really affects regular people that are out in America trying to make a living for their family, trying to grow their business and hire new people. This is certainly one of those, I would say, piece of legislation that was intended to collect taxes that weren't being paid, that I believe was not thought through very well at the time. Might have been, I'm sure, was well-meaning. I have to believe it was well-meaning at the time. But we can certainly, what is important is that at this time we can see it is not working. It is very harmful to small business at a time when we need to be growing jobs and expanding our economy. This is the type of legislation that's working exactly in the opposite direction.
Well, I want to thank you, because that's why I came to Congress, to vote on legislation just like this. So I certainly hope that Ways and Means takes it up. Thank you. I yield back.
Mr. Herger, thank you again. I appreciate you coming in, and thank you for offering the bill this year.
Thank you. And again, I want to thank this committee. I want to thank you, Mr. Chairman, who also is a new member. compliment you
And a
for
small
being
business one,
chairman.
so I really
and small
appreciate it.
business one. And this is the type, as well as Mr. West and some others, that this is the time to correct this. Thank you for your emphasis. Working together, we will repeal this.
Thank you, Mr. Hergen.
Thank you.
Ask the committee to go ahead and begin to seat the second panel if we can. And while the second panelists are coming up, a word to all of the panelists. There's those little crazy lights in front of you. They're green, yellow, and red. It'll be green for the first 4 minutes, yellow for the second minute, and then turn red. We usually do let you go a few minutes beyond if you like. Today, we'd like to, again, try and keep as close as we can because of the time constraints that we're under. If you start to hear this tapping motion, that means that we're asking you to please wrap things up as quickly as you possibly can. Do that at the end. Second panel has two government witnesses. First, I'm pleased to welcome Mr. Curtis Loftus, Jr. Mr. Loftus was elected treasurer of the great state of South Carolina in November of last year. In this role, Mr. Loftus is responsible for the investment, cash management, and safekeeping of the state's general and restricted funds, and also the assets of the South Carolina retirement systems. He also serves as the vice chairman of our state budget and control board, which handles the state procurement programs, state insurance, the Budget Office, State Auditor's Office, State Human Resources Office, the General Service Office, the Budget Office, and the State Technology Office. Prior to running for office, Mr. Loftus owned and operated a very successful small business in West Columbia. Welcome, Mr. Loftus. Also like to welcome at the same time our second witness, Mr. Brian George. He's the Deputy Director of the Office of Cost, Pricing, and Finance, Defense Procurement and Acquisition Policy, where he's the lead for reinvigorating cost and pricing skills within the Defense Department and advises the Director on issues relating to contract cost, pricing, and finance. He's accompanied by Mr. David McDermott, the Director of Standards Compliance, Defense Finance, and Accounting Service. Mr. McDermott is responsible for developing finance and accounting goals and standards and analyzing operational results. Mr. George is going to provide testimony on behalf of the Defense Department and answer questions related to those issues. Mr. McDermott will not be testifying, but is also available to answer questions as well, especially regarding the defense accounting system. Gentlemen, thank you. We're going to go ahead and recognize Mr. Loftus for his comments.
Thank you, sir. Mr. Chairman, members of the committee, I'm honored to be here today.
Mr. Chairman and members of the committee, I'm very honored to be here today. I urge the repeal of the Federal 3% withholding provision. Section 511 imposes an arduous and costly mandate. It will unfairly penalize state and local governments and businesses that run honest, taxpaying companies. The impact and unintended consequences of this requirement on both government and private enterprise are serious. Expensive implementation costs come during a time of a weak financial recovery. Compliance with this requirement will prove oppressive to private industries and will definitely cost us jobs. Of course, the taxpayer will have to pay the burden of this plan. I'm the treasurer of South Carolina, but I'm also a small businessman. I have 3 dozen employees in Columbia, so I have to take these issues seriously. I'd like to share with you how I see the impact of this law. First, let's look at the negative impacts on the state and local governments. The provision imposes administrative costs and recording requirements for implementation and maintenance of the vendor tax withholding and the actual payment of the tax on behalf of the vendors to the IRS. It will be an administrative nightmare. There will be major modifications to accounting systems and other administrative processes. The manpower and dollar cost of the provisions for the local and state government access across the country will be astronomical. Coupled with administrative costs, many believe the vendors will increase their prices to government in order to compensate for this penalty tax. Again, as a result, the taxpayers will pay more. The withholding law will negatively affect governments' budgets at the time that every dollar counts. Smaller units of governments may not be able to sustain the burden of administering this program. Federal tax enforcement is the function of the IRS and the Federal Government, not of the state and local governments. The 3% withholding penalizes all tax-compliant businesses. It forces them to provide the Federal Government with an interest-free loan by requiring advance payment on taxes, which may not even be due at the end of the year. The withholding is based on gross revenues from contract payments, and they have no relationship to taxable income. Firms with tight profit margins will lose funds necessary for vital operations. Cash flow may be damaged to the point that some companies withdraw from doing business with the government altogether. Business expansion could be halted or deferred. Additional cash flow constraints can push some companies out of business altogether. I'm particularly concerned about what Section 511 does to my home state. Small business is essential to the well-being of South Carolina. In 2008, there were 364,000 small businesses in South Carolina, and they account for 50% of the private sector jobs. Small firms made up 97% of South Carolina employers. Small business is the engine that drives South Carolina's economy. The success of small business sector is critical to our economic recovery. The withholding requirement will reduce the amount of capital available for payroll, new business investment, and daily expenses. South Carolina's unemployment rate in April placed us at the 9th highest in the country. Mr. Chairman, we need jobs, not more regulation. We need capital, not more taxes. There's a saying, an error we refuse to correct has many lives. I believe the negative consequences of this mandate will snowball, so I strongly urge the members of this committee and the House to take action as quickly as possible to repeal Section 511. And lastly, I'd like to commend Representative Herger for his work on H.R. 674. And also, Mr. Chairman, I'd like to give a special thank you to my fellow South Carolinian for allowing me to come and speak to you on behalf of the state and local governments in South Carolina.
I appreciate that very much. Mr. George, if you go ahead and give your testimony, then we'll ask questions of the panel as a group.
Chairman Mulvaney, Congresswoman Chu, and distinguished members of the Subcommittee on Contracting and Workforce, I welcome the opportunity to appear before you today to discuss the Department's report to Congress. Our 2008 report addressed the impacts of compliance with Section 511 of the Tax Increase Prevention and Reconciliation Act of 2005. My name is Brian George, and I serve as the Deputy Director in the Office of Cost, Pricing, and Finance for the Defense Department. My organization prepared the 2008 report. With me today is Mr. David McDermott, the Director for Standards and Compliance at the Defense Finance and Accounting Service. He is responsible for overseeing the Comptroller's implementation of Section 511. Our report was submitted in response to the House's Committee on Armed Services request that the Department assess the impact of compliance with Section 511. As you are well aware, Section 511 requires Federal, State, and local governments to withhold and remit to the IRS 3% of payments made to contractors for goods and services. At the time the report was prepared, the IRS had not developed its regulations to implement the Section 511 withholds. As a result, our report was based on a number of assumptions regarding how the IRS would implement the withholds. We originally estimated for implementation and then management for the first 5 years $17 billion to comply with Section 511. This included about $4 billion related to the Department losing the use of the commercial purchase card and about $13 billion related to contractors' cost. The Department still expects the impact to comply with Section 511 to be in the billions of dollars, but lower than our original estimate. It will be lower since a few of our assumptions in 2008 differed from the final IRS regulations published this month. Let me discuss just two of those assumptions. We correctly assumed the IRS would not allow companies to offset the amounts withheld under Section 511 against their estimated quarterly income or payroll tax payments. The report expressed our concern that contractors properly paying their tax obligations will experience cash shortages equal to the amounts withheld until the amounts are recovered through the normal Federal income tax process. However, we incorrectly assumed that the IRS would not exclude third-party payments, such as a commercial purchase card, from the 3% withhold. Our report stated that if third-party payments were not excluded, DoD would lose its ability to use the commercial purchase card. This would occur because the Department would not be able to execute withholds against those payments. Almost $8 billion of our estimate related to that impact. However, in its final rule, the IRS indicated that it may require withholding on such transactions in the future. Although the cost for DoD and our contractors to implement Section 511 will be less than we estimated 3 years ago, we still expect the impact to be significant. The Department is concerned that Section 511 will restrict the available cash of tax-compliant companies, especially small businesses, and we are also concerned the Department may lose their use of the commercial purchase card in the future. This concludes my verbal statement. Ms. McDermott and I will be happy to address your questions and request that my written statement be entered into the record.
Thank you, gentlemen. And for all of the witnesses, your written statements have already been entered into the record. Thank you. Very quick question. You hit on something, Mr. George, that caught my attention, which is that $17 billion was roughly broken into two pots, $4 billion for this purchase card, but $13 billion for increased contractor costs. Tell me a little bit more about that. How did you all arrive at the number? What's driving that number?
Be glad to tell you about that. And the contractor, $13 billion for the contractor, about $4 billion related to the purchase card, $9 billion related to implementation costs and reoccurring costs to implement this rule.
So to implement this particular regulation would cost just the Department of Defense, not the whole Federal Government, just the Department of Defense, $9 billion.
Well, the $9 billion.
Sorry, million or billion, sir?
Billion.
Okay.
The $9 billion, most of that is contractors' cost.
For them to implement it.
That's
Which
correct.
is then passed on to us through higher
It could
costs.
be passed on to us. That's correct.
Exactly. Thank you, Mr. George. Mr. Loftus, do we, very briefly, do we withhold in the state of South Carolina now in a system similar to that? Do we withhold for taxes?
No, we have a limited program. We have a limited program for out-of-state contractors who do work with the state, but it's a state tax, nothing for the Federal Government.
So you'd have to completely overhaul your entire accounting system at the state, local, and county level in order to implement this regulation.
That's right. There are multiple agencies now, like Department of Revenue, the Treasurer's Office, Comptroller General, and others, Office of the Budget, who are working on this all without any certainty of where the program is going. So it equates to a lot of wasted man hours so far.
I recognize Ms. Chu for as much time as she needs.
Mr. George, we've talked about the implementation costs for the DOD. Are you aware of any other agencies that have conducted similar studies that analyze their costs in complying with the 3% law?
No, ma'am, not familiar with any other agencies.
DOD, of course, is so large. Would you anticipate that it might cost even more for smaller agencies to implement such a withholding?
I would be reluctant to answer for any other agencies, Congresswoman Chu.
Well, then, Mr. McDermott, let me ask, the original intent of the 3% withholding was to stop tax cheats. It's a laudable goal because there are many tax-compliant businesses that are competing with these tax-avoiding businesses. However, the 3% withholding provision will make honest taxpayers face these enormous burdens under this law. As the Director on Standards and Compliance, what other less burdensome methods are available to the Federal Government to ensure that government contractors are also good taxpayers?
Congresswoman Chu, I can speak to what we do today to ensure that we're working with companies that are not delinquent on their taxes. In the beginning of the contracting process, the contracting officers do check to see with the contractor registration system to see if a contractor has been disbarred or for some reason has some delinquency or other reason that they wouldn't do work with the government. For the agency that I work with, we participate in a program called the Treasury Offset Program, where we trade information with the Department of the Treasury, approximately 13,000 payments a day that we share information with the Treasury on, that the Treasury looks to see if there are any delinquencies, either for taxes or other government debts. And if there is such a debt, we offset the amount up to the amount of the payment that we're looking at that particular time. During fiscal year 2010, we were able to liquidate 3,500, approximately 3,500 debts. That's our main way of ensuring that we assist the rest of our government partners in liquidating debts to include tax debts.
How do you assess the success of this?
We believe that it is a successful program by virtue of the fact that we did find approximately 3,500 debts working with the Treasury, and that was funds that were recouped to the government that did not go to the contractor where we would have to go after them after we had made that payment.
Mr. George or Mr. McDermott, small businesses provide the Federal Government with goods and services in a wide range of services. Examples include construction contracts, retail and information technology services. From the DOD's perspective, are there any industries that would be disproportionately affected by the 3% withholding requirement?
Ma'am, not from my perspective. I think small businesses would be hurt perhaps harder. That's a speculation on my part. And let me just go back to the other question you asked, Mr. McDermott. One thing that's happened on the contracting side since this law was passed is contractors have to certify that they're not tax delinquent to get a government contract. So that's a significant step they have to go through now to get a contract. It didn't happen before.
Yes. Yeah, Mr. McDermott.
Congresswoman Chu, our applicability of this would be across every organization that we do business with, so I can't say that any one particular business would be disproportionately affected just by the withholding. Obviously, other things that you've discussed about small businesses and the impact it may have on that.
Mr. George, the SBA estimates that nearly 75% of all small firms will fail within the first 5 years, while existing firms may be able to absorb a 3% withholding. Newly formed firms are often the most cash-strapped. At a time when we should be promoting economic development, has your office done any assessment on the impact that the 3% requirement would have on startup companies?
We haven't done that, but one thing we've tried to do for small businesses, we just implemented a new rule where we can accelerate payments to small businesses. So we're aware of it's important to increase their cash flow. So we're trying to do that as a department.
Thank you. I yield back.
Thank you. Recognize the gentleman from Florida, Mr. West, for 5 minutes.
Thank you, Mr. Chairman. And my question is for you, Mr. George and Mr. McDermott. A couple of weeks ago, I had a really good conversation with a dear friend of mine, Colonel Pete Newell, who is the head of the Rapid Equipping Force for the United States Army. Are you familiar with the Rapid Equipping Force mission?
I am not.
Not personally. No.
Okay. The Rapid Equipping Force for the United States Army, what they do is they go out into the combat theaters of operation, and they get recommendations from the soldiers that are on the ground. And then they come back here to look for small businesses that can provide these requirements of these emerging technologies that they don't have to go through the entire long, drawn-out procurement process. You know, my concern when I look at this, and I'd like to get your estimate, you know, do you think that this 3% withholding provision would incentivize a lot of small businesses to go into contracts that can enable us to provide, you know, rapid technologies to our soldiers that are on the combat theaters of operation right now?
Incentivize or decentivize?
Well, do you think that as it is right now, this provision, will it incentivize people to go into, you know, contracts with the United States Army to provide these emerging technologies for our soldiers in the field?
I would speculate it would not incentivize them at all.
Thank you very much. I yield back.
Thank you. At this time, I'd like to recognize the gentleman from Oregon, Mr. Schrader, for 5 minutes.
Well, thank you, Mr. Chairman. Since you're resident government experts, I'll ask a couple questions, and if you're unable to answer them, I'd understand. The bill, as originally conceived, talked about some exceptions. What do you all know the exceptions to the 3% withholding?
Off the top of my head, no.
All right. Given the fact, and you alluded to it a moment ago in your testimony, Mr. George, that there have been some improvements and changes in how we're addressing some of the delinquencies that have occurred, and could you elaborate a little bit on some of the others that are out there that have occurred since this bill was put in play, and how that has hopefully positively affected your ability to collect monies you would otherwise not have been able to collect from contractors?
Well, I'd say there's two. One is on the contracting side, and one is on the comptroller side, as we mentioned. One is, again, it's very significant. They have to register if they have $3,000 or more in delinquent taxes before they get a contract. The contracting officer has to look at that, and if it actually is affirmative, they have to investigate that, and may even refer that to the debarment official if that's an affirmative response. On the comptroller side, Mr. McDermott mentioned about the offset program as well. So those two things, I think, have been at the prime contract level very successful.
Are you able to quantify how much improvement you've gotten, and DOD is, you know, how your collections have improved quantitatively as a result of those types of improvements?
Congressman Schrader, for fiscal year 2010, because of the Treasury offset program, we were able to collect on approximately 3,500 instances of debt. I don't have the dollar amount to be able to quantify that, but prior to the Treasury offset program, we were not sharing that type of information, so that would have been information we would not have had to offset those payments.
So that's good news. Without having to burden small businesses, you're making inroads just with some of the newer regulations. Isn't it also true that the acquisition forms and processes would have to be changed at some cost to the Federal Government as a result of this law if it gets implemented?
On the acquisition side, we'd have to make some changes to our systems and also on the comptroller side, and we have to implement regulations and make sure we collect the 3% withhold. That's correct.
So we're only seeing that, I think, to reiterate a point that I think is being made here, that we're only seeing the tip of the iceberg in terms of increased costs to government, contractors, and small businesses as a result of this 3% withholding.
There's definitely an increased cost. That's correct.
Good. I guess I'll yield back, Mr. Chair. Thank you.
Thank you, Mr. Schrader. I recognize the gentlelady from North Carolina, Ms. Elmers, for up to 5 minutes.
Thank you so much, Mr. Chairman. And my questions are going to be directed to each one of you. You know, the cost of doing business in this country is extravagant, and we're losing jobs, and we're not creating jobs because of it. Mr. Loftus, in your opinion, does this 3% withholding increase jobs or decrease jobs?
Decreases jobs, most decidedly.
Mr. McDermott?
That would be out of my area of expertise, Congresswoman Elmers, to answer.
Well, from a common sense standpoint, if the cost of doing business is increased for any small business company, contractor, doesn't that really equal the loss of jobs? That's one less job for every regulation, every tax that you have to adhere to. That could possibly be a job that you're not creating. Wouldn't you agree?
Congresswoman Elmers, I can't disagree with you, but I would not be able to base that on our estimates or what we're doing to implement this law. But I cannot disagree with you.
So let me ask you this then. From a small business perspective, contractor perspective, do you agree that the cost will have to increase for consumers, that the cost of doing business will go up because of this 3% increase?
Again, Congresswoman Elmers, I can't say for sure. I'm sure there are a number of different ways that a business person would look at this to try and compensate for it, to ensure that they have appropriate cash flow and to compensate for their profit margins.
Do you believe the revenue that has been found, or the tax advantage that you had mentioned, that there were some tax revenues that were found because of this, do you think that that fully offsets the cost to our consumers?
I don't have the exact dollar amount of what we collected, but I'm quite positive that it would be less than what we're estimating it would cost to implement this.
That it would be actually less, that the money that is actually generated for the government in tax revenue is actually less than the cost to the business owner? From the Treasury Offset Program, yes. Mr. George, could you?
Let me answer that from a personal perspective. I think when you mentioned it will increase costs, I think it will increase costs. At one time, I was on a small non-profit, small business. It was a school on the board of directors, and cash flow was incredibly important. And this will affect their cash flow. And if you don't have cash, you can't pay your employees. And that actually happened to us a few times. So I understand the impact of small businesses.
Yeah, you know, I mean, we're seeing this over and over again. I had the opportunity back home last week when we were in our district, sitting down with small business owners, some of them contractors, and the cost of doing business is so high that they can't create jobs. There's so many issues. Regulation, taxation is what's harming all of our businesses, and that's why we're not creating jobs in this country. You know, the private sector is where these jobs are created, and until we deal with these issues, we're going to continue to see this. We can turn this around. It's just going to take a matter of all of us putting our heads together. So thank you. With that, Mr. Chairman, I yield back.
Thank you, Ms. Elmers. I have one or two brief follow-up questions for Mr. Loftus. Mr. Loftus, you mentioned in your testimony that I think you said you're already starting to try to implement this. Is that correct?
Well, we have to study it. You know, the deadlines keep being pushed back. So the CG's office has spent a significant amount of time. The Department of Revenue, you know, all of these offices, we study, and then it gets put off, and it studies, it gets put off. But we have to devote valuable man time to it. The computer resources devoted to it and the changes needed are going to be particularly expensive. We've just gone to a new statewide accounting program, which of course will have to be, it was just written, will have to be altered.
And is that replicated at the counties and the town levels as well?
Counties and towns will have a very difficult time. You know, I think the threshold that you could drop below that you don't have to mind this regulation is $100 million. But for counties that have hospitals or school districts, that's not very hard to get through at all. And they're just not equipped. Treasurer's offices in some of these counties may be 2 people.
You know, we talk oftentimes up here about the importance of making permanent changes as opposed to continually making temporary changes. In your mind, is there a difference between a 1 or 2 year extension and just a complete removal of this requirement?
The complete removal will be great. the uncertainty breeds just that uncertainty, and that cost us money.
And how many contracts approximately is the State of South Carolina going to be
Well,
impacted?
it's funny you ask that, because I tried to find that out, and we don't know. And because the contracting process is so old, it's never been brought on computers like it should be. So this is one of the problems. So when we started investigating whether or not we'll have to have arbitration on contracts that were multi-year that extend into this period, we just don't know.
Is there any reason to think it's going to be better in any of the other states?
I can't imagine, no. No,
in fact, we're relatively small. I would think it'd be awful in a state like California, Texas, or New York.
I can't imagine the headaches they'd have.
Gentlemen, thank you very much. I really appreciate your time. Does anyone have any follow-up questions? Thank you again.
Thank you.
At this time, I'd like to seat our third panel. Final panel is made up of 3 small business witnesses and a government contracts expert. First witness is Mr. Mike Murphy, the president of Murphy Turner Company Incorporated, a third-generation family-owned general contractor specializing in water and wastewater treatment plants. He's also from Rock Hill, South Carolina. Mr. Murphy is testifying on behalf of the Associated General Contractors of America. I'm especially pleased to welcome Mr. Murphy. He's one of my constituents. We also have with us Mr. Ian Frost, a principal at EEE Consulting in Mechanicsville, Virginia. He's testifying on behalf of the American Council of Engineering Companies. Mr. Frost, welcome as well. And we have Mr. James Gaffney, Vice President of Goshen Mechanical in Malvern, Pennsylvania, testifying on behalf of Quality Construction Alliance. And we also have an additional witness who will be introduced by the ranking member, Ms. Chu.
Thank you, Mr. Chair. It's my pleasure to introduce Kara Sakamoto, who is a partner with the law firm Wiley Rain Law Firm and is an expert in federal procurement law and policy. She has extensive experience in litigation matters relating to government contracts, including bid protests, claims litigation, prime subcontractor disputes, and trade secret misappropriation litigation. She regularly counsels government contractors regarding compliance matters and has conducted numerous internal investigations of alleged misconduct by government contractors. Ms. Sakamoto is also an adjunct faculty member at George Mason Law School. Thank you for being here today, Ms. Sakamoto.
Thank you, Ms. Chu, and welcome, Ms. Sakamoto, as well. We'll begin with Mr. Murphy. Mr. Murphy.
Thank you. Thank you, Chairman Mulvaney and Ranking Member Chu, for the opportunity to testify on the 3% withholding law. I am testifying on behalf of the Associated General Contractors of America, a national trade association representing more than 32,000 companies, including 7,000 of America's leading general contractors and 11,000 specialty contractors. My name is Mike Murphy. I'm president of Turner Murphy Company. My dad, Turner Murphy, started our company in 1950. We are a third-generation construction company based in Rock Hill, South Carolina. Today, we work primarily on wastewater and water treatment plants construction, ranging in size from $100,000 to $25 million. We employ 7 full-time employees in the office and 20 to 40 in the field, depending on how much work we have. However, I believe Congress is making it tougher and tougher for my company to stay in business by not repealing a requirement that will make federal, state, and local governments withhold 3% from each and every payment to contractors for goods and services. This withholding applies to the total contract, not to the taxable net revenue generated from a project. This provision has nothing to do with my company's tax liability. It is just an accounting gimmick that whitewashes over the real cost of government while leaving small companies like mine holding the bag. This 3% holding is more than the profit margin on most public construction contracts for companies like mine. The average take-home after taxes for construction is 3.2%, and for smaller construction companies, 25 million and under, the margin is closer to 1.6%. So the 3% withholding is almost 200% of the total profit for small companies. Local, state, and federal governments already hold 5 to 10% on our payments until project completion. Retainage is different than this withholding requirement in that it is tied directly to the project and is released when the project is completed. The 3% withholding is not tied to the project nor based on any project performance criteria. It is not released when the project is completed. It is held for as much as a year or more. It is just an interest-free loan to the federal government. This withholding also affects critical parts of my business, such as cash flow and bonding capacity. When the public owner I'm working for withholds 3% from each and every payment, it causes my company to finance more of the work on the project without being paid for it. This ripples down to my suppliers, subcontractors, and service providers. Some suppliers ask for payment up front, which means I am paying for things before being reimbursed by the government entity. The additional 3% withholding will make this process even worse, which could possibly hamper the ability of some general contractors to pay their subcontractors in a timely manner. This reduced cash flow would also restrict bonding capacity, which is the key to my company being able to bid on projects. Federal law requires that construction contractors carry several types of bonds. Surety companies who provide the bonds study my books in detail before offering coverage. Based on past performance on contracts, the suitability of my company to perform the work for which I bid, my assets, and my cash flow, surety gives Turner Murphy Company a bond rating which governs the price of the bonds and how much bonded coverage I can receive. My ability to get bonding directly impacts how much work my company can take on. And the implementation of this law couldn't come at a worse time for my company and my industry. The construction industry went into a recession a year and a half before the overall economy and still has not emerged from it. The industry has lost nearly a third of its workers and nearly a third of the construction put in place since 2006. The tough economic conditions have made competition on public jobs fierce and profit margins tight. We are seeing more and more bidders on a dwindling number of projects. This causes many companies to shave more and more out of profit margins in hope of actually getting the job. What is truly frustrating for us is that there are already policies in place that prevent the kind of tax behavior this law is designed to stop. Instead of punishing all contractors, the federal government should enforce the laws already on the books. Existing laws require all corporations to make quarterly estimated tax payments to cover income tax liabilities. These laws should be vigorously enforced. And on public projects, all of our jobs are bonded. Having bonds on projects ensures the taxpayers that the jobs will be completed at no additional cost to the public. This new 3% withholding law is just another layer of red tape that creates serious cash flow problems for government contractors and perhaps the worst industry conditions in modern times. It does not help solve a problem by using solutions that are already on the books. It is just a bad public policy. 3% withholding on government contracts will seriously impact my business and the businesses of the construction industry at large. The vast majority of the members of the contracting community are responsible taxpayers. Don't punish the whole industry because of a few bad apples. Again, thank you for the opportunity to testify on behalf of AGC, and I appreciate the fact that 3 members of the subcommittee and 6 members of the full committee have co-sponsored this legislation. And I look forward to any questions that you may have that will help get the rest of you to co-sponsor H.R. 674.
Thank you, Mr. Murphy. Appreciate that. Mr. Frost, you are recognized for up to 5 minutes.
Chairman Mulvaney, Ranking Member Chu, and members of the committee, I appreciate the opportunity to testify today on the 3% withholding mandate, and particularly its impact on small firms that contract with Federal, State, and local entities of government. My name is Ian Frost, and I am the President of EE Consulting. We are a small engineering firm based in Richmond, Virginia. I am here to ask for your assistance in repealing the 3% withholding rule. As you know, in 2006, Congress included a provision in the conference report for the Tax Increase Prevention and Reconciliation Act that requires Federal, State, and local governments that spend more than $100 million a year on goods and services to withhold 3% from payments to engineering firms and other contractors. I am also a member of the American Council of Engineering Companies, ACEC, the voice of America's engineering industry. ACEC firms number more than 5,000, over 70% of which are small firms. Most have government clients, and like EE Consulting, would be negatively affected by the 3% withholding mandate. EE Consulting has been in business since 1998 and has grown to a 36-person firm with revenues of about $4.3 million last year. About 95% of our work is for local, state, and Federal agencies. During one of the most difficult economic periods that we have lived through, we have experienced steady growth. Since the recession started, we have actually added 13 new employees, 5 of whom were unemployed. We also signed an agreement to build a new office just as the recession hit. Despite a lot of trepidation over the economic forecasts, we stayed the course on the new building and moved in during the spring of 2010. Our success could not have occurred without an unencumbered cash flow. We've relied upon the personal finances of our owners and the company's cash reserves to buy new equipment, to pay the salaries of new employees until we get paid by our clients, and to pay for expansion of the company, including the new construction. To a small business, cash flow is everything. I'm immensely proud of our past record, yet concerned about the future, because the pending 3% withholding rule would negatively affect our cash flow and our potential to grow and add new jobs. If enacted right now, the rule would mean the withholding of approximately $130,000 of our projected 2011 revenue. Worse still, it might require our company to secure a loan to help us cover operating expenses at a time when cash in the bank is limited. The withholding could limit our ability to make payroll each month, our ability to expand our business, and hire new employees. A $130,000 withholding each year would deplete our cash reserves by about 30%. Our situation is not unique. Our trade association, ACEC, has raised serious concerns over how this mandate will impact engineering firms, including thousands of small firms like mine that work for government. Many engineering companies realize a profit margin of just about 3 to 5% on a contract, and withholding 3% up front for tax purposes will force them to divert funds needed to complete the contract, thereby creating cash flow problems. 3% withholding will also burden small firms with additional administrative and record-keeping costs. Firms like mine will have to modify the accounting systems in order to keep track of the withholding and ensure that it matches with their tax records and tax refunds. I frequently hear in the news that small businesses are the economic engine for the country and are likely to be the main source of job creation that is needed to reduce our unemployment rate. Why then would the Federal Government want to handcuff that economic engine by withholding a percentage of our contracts, hurting our cash flow, and limiting our ability to add new jobs? I know that the withholding rule is intended to help with tax collections, but it seems unreasonable to punish everyone involved in government contracting due to the actions of just a few. The only solution to this problem is to repeal the 3% withholding mandate and replace it with measures that target firms and individuals that are not in compliance with the tax laws. I've attached to my testimony a list compiled by the Government Withholding Relief Coalition of tax compliance measures that have been enacted since the 3% withholding provision was passed in 2006. For example, in 2008, the Federal Acquisition Regulation was amended to require potential Federal contractors to certify that they're in compliance with the Federal tax obligations. This provision makes noncompliance with the tax code grounds for suspension and debarment from government contracts. Measures such as this focus on the problem instead of impacting firms that pay their taxes. As an owner of a small business, I ask you to help give us relief from the unfair withholding rule. Please find alternatives that ensures that the government receives its share of our revenue without damaging our ability to operate, add new jobs, and meet our payroll. Thank you for the opportunity to participate in today's hearing, and I would be happy to respond to any questions.
Thank you, Mr. Frost. And as I mentioned, we're going to take questions for the whole panel after the testimony is finished. Mr. Gaffney, you are recognized for up to 5 minutes.
Good morning, Chairman Mulvaney and members of the House Small Business Committee's Subcommittee on Contracting and Workforce. Thank you, Chairman Mulvaney, for holding this important hearing today and for inviting me and my association to participate. My name is Jim Gaffney, and I am the principal owner of a small business mechanical construction firm, Goshen Mechanical Contractors, located in Malvern, Pennsylvania. My firm operates in the public sector construction markets throughout the greater Philadelphia area, in the Delaware Valley, and throughout southeastern Pennsylvania. Our firm performs many public sector construction projects in which I am prime and subcontractor, such as public school new construction and retrofits and other municipal facilities, both as a prime and as the sub, with a variety of public sector entities that will be covered by the 3% withholding tax unfunded mandated if it is not repealed before it takes effect in January 1, 2013. I am here today representing the Mechanical Contractors Association of America. MCAA is a nationwide specialty construction employer trade association based in Rockville, Maryland. MCAA's member companies perform all types of mechanical, plumbing, heating and ventilation, new construction and maintenance, and service work for public project owners nationwide. The vast majority on MCAA members' companies are small businesses, and many of them perform projects of the type that will be covered by the 3% withholding unfunded mandate. I am also president of the Mechanical Contractors Association of Eastern Pennsylvania, which is based in the Philadelphia area and which counts a majority of small business contractors among its 100 members. Many of those firms, too, perform projects with government entities that will be covered by the 3% withholding mandate. I am also privileged to represent 4 other of our sister associations allied in an ongoing legislative Quality Construction Alliance. These groups are the Sheet Metal and Air Conditioning Contractors National Association, the International Council of Employees of Bricklayers and Allied Craft Workers, the Finishing Contractors Association, and the Association of Union Constructors. According to the Bureau of Labor statistic figures, specialty construction employers present the vast majority of industry employment at over 64% of the employment overall in the industry. The majority of the QCA Association member companies, too, are small businesses. And they, too, perform a great deal of public work projects with the governmental entities that will be covered by the 3% withholding mandate if it should go forward in 2013. I should add that many of the QCA groups also actively participate in the wider Government Withholding Relief Coalition, which also adamantly espouses rapid repeal of the 3% withholding provision in Section 511 of the Tax Reconciliation Act of 2005, and the QCA fully supports that coalition written remarks filed on the record for this hearing. My business is the American dream. I started my business 25 years ago in the basement of my mother and father's home. We worked in the field by day, and we bid at night and on the weekends. The only real downtime that I had was on Sundays for Mass and breakfast with my wife and 4 children. Today, we have over 20 employees and have work on hand of over $8 million. The tax, quite honestly, will put me out of business. Last week, I bid a project in a school district in Lower Merion outside of Philadelphia where I took the job for 4% just to keep the cash flow rolling. I lost the job by 3%. With retainage being held on these projects at 10% plus 3%, small business will be replaced by large brokers that will end up causing the end user more money. Not only will the overall cost go up, but trust me, the quality of work will go down. As a prime contractor, I will not be able to hold the 3% on my subs. As a subcontractor, the prime will incorporate some kind of language to exclude the 3% from my invoices. I've been in business for over 25 years. I pay my taxes every year and on time. It's very easy to determine what my taxes are by the billing systems that are used on our projects. For each project, I must submit a detailed breakdown for the project before it starts. Labor, material, equipment, everything, soup to nuts. Once it's approved, I bill percentages each month for that work that was performed. Each month, a CM, project manager, or owner's representative requires a walkthrough to visually confirm all the work that I have on my invoice has been completed. Once my financial statements are updated, and they're done every 3 to 6 months because the bonding company in this economy is on our backs every day, these projects are listed showing the percentages that are completed, and our taxes are based on that information. And with the restrictions and the quality background checks that are done in the state of Pennsylvania on a lot of the local states and school district work, they actually require me to submit my financial statement before the project is bid. They make me have my accountant notarize that financial statement and sign a letter of non-collusion. I hear from many economists that in these challenging times, most people don't get it on how bad the economy is until the bomb goes off. I see a lit fuse with this tax. Between the extra costs needed for my office staff to track the tax withholdings and the extra work needed for my accountant, I'm looking at least a 24% increase in my cost for recordings. Thank you for your time.
Thank you, Mr. Gaffney. Ms. Sacalotto, thank you for waiting. You are recognized for up to 5 minutes.
Thank you, Chairman Mulvaney, Ranking Member Chu, and members of the subcommittee for the invitation to participate in today's hearing. You have heard firsthand from others regarding the economic impact of the 3% withholding on businesses and the enormous administrative costs the law will impose on federal, state, and local governments. I share those concerns, but my testimony today focuses on a different aspect of the problem, the disruptive and costly impact of the withholding requirement on the federal procurement system. impacts that will likely be experienced by state and local governments as well. My testimony today is mine alone and does not represent the views of my firm or any of its clients. Today, I address 3 impacts and why I believe government has the tools available already to target delinquent taxpaying contractors, making implementation of an across-the-board withholding that bears no rational relationship to past or future tax liability unnecessary. First, the 3% withholding undercuts Federal policies and programs intended to assist small businesses in contracting with the Federal Government. These policies and programs, which I describe in my written testimony, are designed to ease the cash flow burdens on small businesses, remove barriers to entry, and otherwise promote small business participation in Federal contracting. The 3% withholding requirement, however, directly undermines these policies by destabilizing cash flows. It will disproportionately harm small businesses and likely deter the innovative small businesses government is trying to attract from entering the Federal marketplace at all. Second, the 3% withholding will discourage commercial item contractors from selling their products to government. Congress has enacted laws to encourage vendors of commercial items to sell their products to government so that government can take advantage of innovative, commercially available products as well as commercial pricing. Over the past decade, however, as the pendulum of regulation has swung back in favor of oversight, commercial item contractors have found themselves subject to more and more of the regulations that apply to their non-commercial counterparts, but that have no equivalent in the commercial marketplace. The 3% withholding and the cost of complying with and administering it are yet another added cost of doing business with the government. Given a choice of customers, it's entirely reasonable to believe that vendors of commercial items will decline to incur this additional cost. Government will then face reduced competition for acquisitions of commercial items, diminished access to innovative commercial products, and more than likely increased costs because the costs of dealing with the government no longer reflect the costs of the commercial marketplace. Third, there will likely be increased disputes between contractors and the government. Determining whether a contract has been materially modified such that the withholding would apply to contracts entered into prior to December 31, 2012, or if, as the IRS proposes, the government can apply the withholding to payments under any contract after January 2014, regardless whether the underlying contract includes provisions that permit such a withholding, are just 2 areas where disputes will arise. Acquisition regulations provide that if government wishes to add a new requirement or clause to an existing contract or make some other change that increases the contractor's costs, the contractor is entitled to compensation for the cost of the change. Thus, in addition to disputes that will likely arise when parties attempt to true up the withholdings, disputes will arise whether the government is even entitled to include the withholding requirement in the first instance and the cost for doing so. There are likely many more negative impacts on the procurement system that will surface if this provision is allowed to take effect. If there is good news to this story, it would be that there are existing enforcement tools making imposing this costly and burdensome requirement unnecessary. You've heard today about the IRS federal levy program that targets tax debt. This current law now permits the IRS to levy or offset up to 100% of any specified payment due to a vendor of goods or services sold or leased to the Federal Government. You have also heard that current regulations require contracting officers to determine whether a contractor is responsible prior to the award of any Federal contract. To assist with this responsibility determination, acquisition regulations were amended in 2008 to require contractors submitting proposals to certify whether they have tax debt over $3,000. Contractors also are now required to report in a database largely available to the public, but fully available to contracting officers, civil, administrative, or criminal findings of liabilities or penalties over $5,000. Acquisition regulations were further amended to permit the government to suspend or debar a contractor from contracting with the government entirely for being delinquent in Federal taxes. In 2010, the White House instructed the IRS and OMB to review the certifications and report whether delinquent contractors were receiving contract awards. In closing, I do not wish to diminish the seriousness of a failure to pay owed taxes, but note that the system has mechanisms in place that can target delinquent taxpayers without harming taxpaying contractors. Given these existing mechanisms, the perceived benefits of the 3% withholding are vastly outweighed by the burdens and costs the withholding will oppose. Thank you again for this opportunity to share my views, and I'm happy to address any questions you may have.
Thank you, Ms. Sacalotto. I've got a few questions for the panel. First to Mr. Murphy. Mr. Murphy, one of the things we've heard regularly today is that one of the fears here is that contractors will simply add this additional 3% to their bids, and as a result, prices will go up for everybody, including the taxpayer. But I understand from your testimony, I think you mentioned it briefly, that it's actually worse than that. In your industry, you can't do that. Is that right?
That's correct.
Tell me why that is.
Our margins are so tight now, there's always somebody that's willing to take the job cheaper, as Mr. Gaffney said, for 1%. And normally, an added cost you would pass on, but in this industry and in the market we're in now, you just can't do it. So it's just something else we're going to have to absorb, another brick we're going to have to put in our load.
You and Mr. Gaffney both mentioned the concept of retainage, which I'm familiar with, but I'm not sure everybody else here is. When you tell us a little bit about how that works, how retainage works generally.
Okay, we have a contract with a entity like the City of Rock Hill, say $5 million. Well, the first pay request we send in is, say, for $100,000. Well, they pay us $90,000 of that $100,000. They hold the other 10% until the project is complete and you've passed certain milestones. So over the course of that project, it'll go whatever the progress payments are. By the end of the project, they've got $500,000 of your money.
But you get that money upon completion.
Right. It's up to us. When we finish, the sooner we finish, the sooner we get the money. With this money, we're leaving it up to our good friends here in Washington to decide when and how we're going to get it.
And that's what I think a lot of people don't understand about the proposals, is that retainage, which everyone in the industry is familiar with, you get when the project is finished. This 3% withholding is different. You don't get this 3% withholding back until you pay your taxes for the year in which the project finished. So you could finish a project in January of 2012 and not actually get your money until April 15th of 2013. So it's not retainage. I've heard a lot of people say that this is similar to retainage. It's just another 3% retainage, and it's actually much worse than that. We've asked a couple of folks. I'll ask Mr. Frost, Mr. Gaffney, and Ms. Sacalotto as well, because I think you mentioned the legalities of this. Why is another short-term extension not a solution? And I'll put that to anyone who wants to speak to it.
For me personally, the problem I have is we just can't afford, if I'm bidding a project that's going on for 2 years or 3 years, and this could be implemented in the middle of the project, we're having to walk away from it. So I'm not bidding the work today for any of the long-term projects just because of the fear that this could come into play in the back end of the project, in the last year of the project. We just can't afford it. I just couldn't do that. So that's why it's impacting us today.
Ms. Sacalotto?
Sure. Well, contracts every day are being entered into, and some of those contracts are long-term contracts. They're not just for the next couple of years. They're for the next 5, 7, 10 years. And there are no provisions in the Federal Acquisition Regulation now that implement this 3% withholding. Yet there are plenty of provisions that require the government to pay its bills on time and pay them in full. So we have a lot of instability in the market right now as contractors are trying to figure out, well, how am I going to deal with this? And contracting officers don't really have the tools necessary. As we can see, people are still trying to figure out how to implement this. So as contracts are being entered into now, there's a great deal of uncertainty. So having instability in any market is obviously not a positive thing.
And let me add to that, if I may. You mentioned that if it was delayed, would that be helpful? And of course, there would be some advantage there. But you heard the gentleman from the Department of Defense speak to the fact that they're already planning for that and incurring costs associated with that planning, as is the industry. And so if we're incurring costs when the ultimate outcome is going to hopefully be repeal of that mandate, then why not repeal it now?
And I think Mr. Loftus said the same thing. The States are doing the same thing in anticipation of it
Exactly.
possibly coming to. Mr. Murphy, you had an addition?
To me, put it off another day doesn't help because it's still a bad policy. It's not going to be any better a year from now, 2 years from now, 3 years from now.
Mr. Murphy, you mentioned one thing, and this will be my final question, that caught my attention. You mentioned that the average margin to a contractor of your size, 3.2%, I think you mentioned. And then you mentioned that for a lot of the subs who are smaller than you, it was down as low as 1.6%. And I think that drove home for me how dramatic the impact, while the impact of this bill would be felt industry-wide, the smaller the business, the more dramatic it would be. How would your subs be able to operate under this system?
Like Mr. Gaffney said, some of these you wouldn't be able to pass it on to them. They just go out of business. Because a lot of these guys that we deal with, concrete finishers and some mason stuff, you have to pay them every week. You hold 3% for a year on them, they would just go out of business, or they'd quit doing work with you.
Thank you very much. I'll recognize Mrs. Chu for as much time as she would like.
Thank you. I wanted to follow up on several of the issues you raised, Mrs. Sacalotto. Ms. Sacalotto, one of the central themes of your testimony was that the 3% withholding rule undermines other government initiatives established to promote economic growth for small firms. Can you explain how those traditionally disadvantaged firms, such as minority-owned or women-owned firms, would be impacted?
Sure. I can give you well, if a company cannot raise money to operate its business, obviously any policy that we put into effect, just at a broad level, is not going to be effective because it will be driven from the market. But a specific policy that is put into effect in the Federal Acquisition Regulation, and even more so by DOD, is to give small businesses a greater percentage of their progress payments. So a traditional large business, the default is 80% of your costs. Small businesses, depending on whether it's with a civilian agency or DOD, can get up to 95% of their progress payments. And there's also, you heard mentioned, a DOD policy that was recently enacted to accelerate payments to small businesses. Well, shaving off 3% is obviously directly undermining those policies that are meant to assist small business with contracting with the government. It undermines that the notion that you will get paid faster, yet you'll get paid less, is not exactly equal.
You also raised the issue pertaining to Federal Acquisition Regulation. Complex Federal contracting regulations already serve as a huge barrier to small firms seeking government work. Can you elaborate on how Federal Acquisition Regulations would be modified if the 3% withholding became effective, and what this would mean for small businesses in the contracting arena?
Honestly, I think that the repercussions are going to be enormous. And I haven't studied this, but I've been thinking about recently the Prompt Payment Act. The Prompt Payment Act is a government law that was enacted because the federal government didn't have rules about when it paid its invoices. So sometimes it was paying too late and incurring interest, and sometimes it was paying too early and losing the time value of its money. So the Prompt Payment Act has rules about when you pay your invoices. And if you don't pay your invoices on time, the contractor is entitled to interest. If the government pays early, there are certain clauses that are in the FAR, which is the Federal Acquisition Regulation, that allow the government to get a discount for paying early. It seems to me that the entire prompt payment system is going to be is completely broken. If the government can essentially not pay promptly 3% of the payments that are owed, are they going to incur interest on that because they're not paying it promptly? And the idea of this was the government was realizing it was losing a vast amount of money, the time value of money, by paying too early. Well, contractors are now losing that time value of money by paying their taxes early. So, and should the government get a discount for paying early when it is withholding 3% of the money? This is just one tiny little aspect of the contract process that I think will be affected by this 3% withholding. This applies to small businesses, large businesses, all businesses, and contracting officers and our acquisition workforce who are stretched thin already are going to have to try to figure out how to deal with this.
And my final question has to do with those commercial item vendors, those small businesses that offer all kinds of items, including high-tech products that would be available on the commercial market. In your testimony, you mentioned that 3% withholding would disproportionately dissuade commercial item contractors. What is unique about this industry that would create this situation?
Well, when you think about a commercial item contractor, you're thinking about somebody who's or a company that's business is not tailored to, perhaps building a bomb or something that's specific to the federal government. It's providing perhaps IT services and cloud computing and things that I don't even know about because they're so high tech and innovative. Well, they can sell their products out on the free market to companies, to businesses, to anybody. They don't have to necessarily, they're not beholden to the federal government for this. It's a great market to enter into, but is it such a great market to enter into when I have this 3% withholding and every other cost of doing business? As a small, innovative business, if I have options, this will definitely make me consider whether or not it's worth it to come into the federal marketplace.
Thank you. I yield back.
I recognize the gentlelady from North Carolina, Ms. Elmers, for up to 5 minutes.
Thank you, Mr. Chairman. Ms. Sausalito, my question for you is, you had outlined that there are already provisions in place that should be dealing with these issues as far as, the revenue coming in, the tax burden that we may be lost. That's correct, that you feel they're already in place?
Yes.
And yet they're not being adhered to?
Well, that I don't know from an IRS perspective whether or not they're being adhered to. I believe that a number of laws have been passed recently to allow the IRS to withhold more and more money. I would say that the recent GAO report that came out that the chairman mentioned, there were 15 cases of delinquent taxpayers that were, I guess, emphasized in that report. The IRS has gone after all 15 of them. So I can't say that it's not working.
Okay. Well, based on the information that we have, and considering that there are things that are already in place, why do it seems to be the impetus for this is to find this money, this 3% withholding, in order to help pay for that, or to find that, or to locate those monies that might not be coming in, and pretty much put that burden on all of our good tax-paying citizens because of those few that do not. If in fact those things that are already in place really don't seem to be working, why would this work? Why, in your opinion, what would make this the golden egg of finding tax revenue?
Well, I don't think this is the golden egg of finding tax revenue. And like I said, I can't say that those measures aren't working. Some of the evidence suggests that they really are. And to go back to this GAO report, I would say that that report, it is unfortunate that there are contractors who don't pay their taxes. Nobody is going to defend that. But if you read the report, it was only 5% of the contracts that were actually examined. 45% of the taxes at issue that they found owing were payroll taxes. They were non-income taxes. So will this help that? No, it will not get that entire 45% of the problem that was identified. Also, half of the delinquent taxpayers were subrecipients. And I think, in my mind, I think of a subrecipient as a subcontractor. Well, subcontractors are not subject to the withholding. It applies to the prime contractor.
To the prime contractor.
Right. So that's under the IRS rule. So you're not getting all of those people. So, I mean, right there, that's not getting all of the problems. There was an additional. Oh, and then the fact that the IRS has taken enforcement actions against all 15 of the cases that it said were known really bad actors. Well, that to me suggests that the system is not broken, that we need to just focus on using the tools that we have available already rather than adding an additional tool.
Thank you. Mr. Gaffney, if I'm not mistaken, I believe you had said that if this were to be put in place today, it would cost you about 24% more to do business.
Correct.
And you would literally have to close your doors. Is that correct?
When I say that, I know it sounds like it's dramatic.
No, it is not.
It is the truth. In our business, my mother's in the office, my sisters are in the office. Yeah. When the girls are doing the accounting every day downstairs, we would actually have to come down, track down all our vendors, which on a given project could be in the hundreds, make sure that the 3% is held from the vendor, from the subcontractor, from another material supplier, and so forth and so on. And 24% is probably a low number, but I want it to be conservative. And it will put us out for the reason that there's no money to the developers today.
Right.
So in the Philadelphia area and the surrounding areas in Pennsylvania, there's no money for the developers. There's no cash flow out there. So a lot of the smaller businesses tend to go into the work that's either government, the state, local, whatever the case may be. With this 3% that goes in there, we just can't do it. Yeah. We can't do it. For the most part, right now, small businesses in my area are taking jobs for just about nothing, just to keep the money coming in, so the bonding company's happy and the banks are happy for the line of credit. If it wasn't for that, we'd be gone. With that 3% being held for whatever the period of time is, it's coming. It's just a matter of time.
Thank you. Mr. Chairman, can I have one more minute for, I'd like to ask Mr. Frost and Mr. Murphy.
No objection. You're recognized for an additional minute.
Okay. Mr. Frost and Mr. Murphy, I just wanted to ask both of you, as business owners, I believe, Mr. Murphy, you had said that basically this would, for your projected income of 2011 or your projected project, it would cost you about $100,000. Is that?
Nothing else, Mr.
I'm sorry, Mr. Frost. Did you had said that?
We would lose about $130,000 of revenue if it was in today's dollars.
Just to adhere to this.
Yes.
In your opinion, how many jobs would, if you know that is a cost that you are not going to have to incur, would you be able to go out today and hire someone else to work under you?
It would be extremely difficult. As I said, our history has been that we've been hiring people, and we've been able to do that because our cash flow has allowed us to. We would have to take loans if we were going to hire additional people to cover their payroll until we got paid by the federal government or the federal, state, and local government.
Sure. And Mr. Murphy, if you could answer that as well.
I agree with Mr. Frost. I'll make one comment about cash flow. God told me this a long time ago. It's not air, but it's pretty close to it.
Yeah.
So it's that important.
Well, absolutely. And, again, and in your opinion, for both of you, if we just put this off for a few months or a year, you're still going to be in the same situation because you're still going to be faced with that uncertainty, correct?
The uncertainty of it and the inevitability of it if it happens. I mean, it's not like it's going to be easier to take a year from now.
Right. Thank you so much for your testimony. I really, it's been invaluable to this situation. Thank you.
Thank you.
Thank you, Ms. Elmers. And that provides a good closing for the whole meeting. Thank you for everybody who came. Thanks especially to the folks who came from out of town. I appreciate you incurring the time and the expense to do that. I don't think that folks who come to testify often recognize how important these hearings are and how valuable they can be to shed light on issues that ordinarily wouldn't see the light of day. This is not an issue that makes the front page of the Wall Street Journal or the New York Times, but this is an absolutely critical issue for our economy, for our small businesses, and as you could tell, for state, local government, the Department of Defense. This is an important issue, and the fact that you were able to come today, give us your testimony in writing, have a chance to give us your oral testimony, and then take questions is extraordinarily helpful to us as we try and push this bill through on what appears is going to be, to all aspects, a bipartisan basis. So I really appreciate it. The anecdotes especially help us explain to our colleagues exactly how important this is, how powerful a change this would be if we don't fix it. So I appreciate everyone's time. With that, I would ask unanimous consent that we have 5 legislative days to submit statements and supporting materials for the record. And without objection, thank you all to everybody who came, and that will conclude this meeting.